Traders, you're going to be hearing from one of the better technicians I know. His stuff is elite. He has the right demeanor for being a trader, investor, because he takes seriously that price is king. And we have with us today Dave Keller. Hi, Dave. How are you? It's great to see you again. I think we talked last week.
Yeah, we did. I feel
Okay.
like but having a high frequency makes sense given the
Uh,
market volatility. So I'll
Yeah,
take it.
so
Good to see you.
maybe we'll follow up on it. This is Dave's website. He's the editor. You could find Dave on X all the time. He's doing live X's and streams what he's seen in the markets daily.
Mhm.
And I've been, talking to Dave for a while, and uh, you know, you guys know me. I can tend to get aggressive with my calls, and after talking to David, I get grounded. So, Dave, people respect you as a technician, and there's probably a lot of young people out there that are looking at a career as a trader, as an
Mm,
analyst, and first of all, let's warn them that it's not a cakewalk. I
no.
don't know about you, but God bless the broken road that got me to where I'm at right now. Did did you feel the same way?
For sure. I feel like the longer you're in the markets, the scars you see are all your market experiences, right? And life along the way, for sure.
Yeah, well, scars are a sign of character because, if you have fear of, going through some tough times and living through adversity, um, this is not, find something else to do.
No,
Because,
and I would say most people that get into trading don't get into it expecting to be wrong as much as they're going to end up being wrong. And I think that's the biggest challenge for if you're a long-term investor, if you're a swing trader, anywhere in between. It's tough. The market is a humbling experience, and I found it's not about being right all the time, which is what you assume you're going to be able to do, maybe aspirationally. It's
yeah,
about when you're right, staying right as long as possible. But I would argue the most important is to admit when you're wrong, which is really tough for traders filled with bravado and overconfidence and excessive optimism. Sometimes it's the toughest thing to say, you know what? That was not a good trade. I need to cut my losses and move on to the next thing. But
well,
arguably the best thing for your portfolio.
I teach that before you click the mouse, you have to know where you're wrong, and I believe in hard stops
Yes,
because
yes.
I've had experiences in my own trading career where I didn't have stops, and sometimes I have the discipline, and sometimes I'd hear myself say, I think I'll watch it a while.
Yeah.
Okay.
Oh yeah. If you don't have a hard stop, you are just opening the door for your sort of animal brain to start coming up with something else you should be doing, right? And you're
Yeah.
much more likely to make an emotion-driven investment decision as opposed to an evidence-based investment decision, which is what we want to do. So 100% agree, Dale. I always tell people when I enter a trade, I have three lines in my trading journal. Line
Okay.
one, what am I doing? Line
Yeah.
two, why am I doing it? And
Yeah.
line three, what's going to tell me I'm wrong? And you
Yeah.
can't skip that third line. You assume it's not going to work. And what is the chart going to tell me to show me that I'm wrong? And making sure you stick by that, I think, is the game. It's not about being right as much.
Do you have a fourth line that when you're right, what you're looking for, so you could have an idea of what your risk to reward would be on a position like that?
Yeah, so I think that's the point of it, right? So the way I think of it is at the beginning, it's being clear about what you're doing, having an intention, because I find a lot of times traders, when they're just getting started, don't have a real concrete. I mean, if you ask them what they're doing, it's sort of a wishful thinking trade, right? They're hoping something works, and so they
Hope.
take a shot.
Hope is the oxygen in our lives and the carbon monoxide in trading. But we need hope, and you know what? I miss Bob Hope. But do you
Right?
remember him, youngster?
Oh, for sure.
Bob
For
Hope? All right,
sure.
okay.
Yeah.
Yeah, everyone's younger than me, so I could call everyone youngster.
No, I
So,
remember that one. I remember Bob Hope. But I
so
think
go ahead.
Yeah, I think you have to be clear about what you're doing, right? And then you have to be clear about why you're doing it. And I think embedded in that is here's what I think is likely going to happen. This is what I think is going to happen to this trade. This is why it should work. But then the third one is, but if this happens, then I know that was not the right trade. And I think each one of those three is crucial.
Okay. So let's get back to when your animal brain was beginning to form.
Yeah.
I believe that we all have our paradigms by the time we're about 10. And
Yeah, right.
I actually tell people to take a look at their childhood because,
Mm.
if you were kind of a silver spoon kid, you probably have a tendency to be reckless because you always get bailed out.
Mm.
And if you came from scarcity, it's hard for you to sit on winning trades because you have a hard time risking profits. So,
Interesting.
a lot of us bring this into our trading, actually our childhood. It's our paradigm. Until you
Yeah.
work on changing the paradigm, which you have to do in trading or find ways to overcome it. Like for me, it was being unwilling to let my profits slide. And I figured I could get out and I'll know when to get back in. And then I turn my head, the market goes without me.
Yeah.
So I solved it mechanically by taking partials and
Hmm.
trailing stops instead of being all in, all out. Um, it's changed the game.
Yeah, yeah.
So,
That's an interesting one, Dale. I hadn't heard about that, sort of those formative years and how that might influence your trading. I think there's something there.
oh, definitely.
What I've always talked to people about is when, sort of your formative years as a trader, as an investor, right? What the market environment is when you're learning it at the beginning.
That
I
too.
Yeah, so I joined the industry in June of 2000. So I learned about investing, I learned about technical analysis, I learned about all those things as the tech bubble was like actively bursting. And I
Wow.
joined the industry hearing about all these great stories of the late 90s about how easy trading is and things just go up and buy any.com and it's just going to keep accelerating. And then I watched all of that completely implode over the first 2 years of my career. And so the investors that I worked with that thrived during that period were the ones that used charts and recognized that things were different, right? They recognized
Yeah.
that the late 90s, 98, 99 had a particular look and feel. There were all sorts of trends on the charts that looked very straightforward, but all of that changed in 2000. And so I was immediately struck by the value of technical analysis in risk management and not trying to be right, but just recognizing when something's different. And I think to this day, it's probably shaped me as an investor where uh, bear markets make sense to me because that's what I learned. I learned about how you protect from the downside, how you get out, how you get in defensive positions, how that helps, how that,
How down
sets
is
you up for the
faster?
next big
How
move.
how down is faster, Dave?
Yeah. Right.
It's interesting. We share this in common because I
Yeah.
was a runner on the floor at the Merc in Chicago,
Okay.
and they made it legal for U.S. citizens to own gold again, and it
Right.
opened at 200 an ounce. And a floor trader put a trade on for me. I got short at
Yeah.
200, and it went all the way to 100. Now, knowing me, I probably made 20 bucks and watched the other 80 happen without me. But, I it did, and even still, people that follow me, they go, "Oh, Dale, you're always bearish." You could probably say that about me, don't I? Kind of have a bearish tinge to the
I'd
way I
say
look at
healthy
things.
skepticism, Dale.
Okay, thanks, Dave. So, so what a time to enter the business. I want to know
Yeah.
what you were doing right before that. What
Ooh.
led you
Yeah.
into, going to work for a firm
Yeah.
and
This is what we
becoming
call
a
a
trader?
non-traditional background for the financial industry. I actually studied music and psychology as an undergrad at the Ohio State University.
Oh man.
And I knew absolutely nothing about investing until I arrived at Bloomberg in New York in June of 2000. And I was basically studying trumpet and voice. My plan was to go to a conservatory and be a composer or conductor or something. And I was sick by the late 90s, end of my undergraduate years. I was a working musician. That's how I paid, for beer money, basically. And if you think your trading income is volatile, try being a working musician. I mean, it's incredible gains, and I'm doing weddings and parties, and then nothing for like 3 weeks. You just
Yeah,
make
you
zero.
really were prepped for it.
Oh yeah. So I mean the
You're
volatility. So I remember thinking like I have to get a job that actually pays consistently. My goal was just a consistent paycheck so I wouldn't have to deal with the volatility.
yeah,
And so I started interviewing with places and found Bloomberg, which is a market data firm based in New
yeah.
York
It's great,
that love
Bloomberg.
to hire liberal arts majors. And I it changed my life because I remember flying to New York. I landed in LaGuardia. I'd been to New York once before on a choir trip, and I was like, if I could work here, like I'll do it. Like this sounds awesome. This looks a cool place, great city. And so I joined there and just never looked back. And so that's what got me in the industry. And then technical analysis, the other major I had was psychology, and I was
Okay.
immediately drawn not to, the accounting, practices of fundamental analysis or any of these other things. I was drawn to the psychological aspect of technical analysis. It
You
was
went
all
to
about
sentiment,
it
sentiment.
was all about sentiment. It was
Yeah,
understanding how other investors were thinking. It was all about managing your own emotions. It was you're probably going to make bonehead mistakes, but these charts will help you not do that.
yeah.
And so it made sense to me. Like no one had to sell me on it. I just got it. And so from there, I just started studying it as much as I could. The cool thing about working at Bloomberg was I had an opportunity to work with people like Tom DeMark, Larry Williams, John
Yeah,
Bollinger, Steve Nissen, who kind of
yeah.
popularized candle charts. Like these were all people I was asked to connect with to help, build up our technical analysis tools. And as a result,
How
I just learned a
fortunate,
ton from
Dave,
them. Yeah,
compared to people have to scour the internet,
yeah,
and you
yeah,
were there, and I consider being on the floor to be
yeah,
really wasn't a blessing
yeah,
to rub
no,
shoulders with those guys and the
yeah,
people you're talking about. Yeah, they were my idols, and
yeah.
when I was on KYTV in LA on 22,
Nice.
all those guys were there. All
Yeah,
those guys were there.
yeah, yeah.
And anyway, so charts did it for you. You know what? When you were telling the story about being a
Mm,
musician,
yeah.
I think if you write a script, that you have a sequel to Mr. Holland's opus.
Maybe, right?
I mean, it's the
Maybe.
same thing, right? He wanted to be, he wanted to write, classical music, and
Yeah,
he ended up being a teacher,
yeah,
and you're a teacher too.
yeah. No, it's true. Yeah, life goes in takes you in other directions. The good thing about music for anyone listening, it's something you can do your whole life. So next week, I'm actually going to a music camp in New Hampshire where a bunch of composers and performers get together and try things and play things and experiment. So I'm still doing it on the side
You
for
can
sure.
still blow pretty good, huh?
You have to work up the
Yeah,
chops after not playing for a while, but the
yeah.
last 6 weeks I've been playing
Do
pretty
you
regularly.
do you get like callus over your lips playing the
You
trumpet?
get swollen lips from playing so much. Yeah, for sure.
I wanted to play the trumpet
Yeah,
in high school, but
yeah,
I had to go to the orthodontist first.
yeah.
Okay, so
That's a common challenge.
I had a
Yeah, yeah.
I had buck teeth. I wasn't always this handsome, Dave. All right.
A
Anyway,
lot of work went into that. Okay.
I went I went through my geek stage, and why don't you grab the screen?
Yeah,
We have some time left, and
yeah,
we could talk about what's going on. There was some decent CPI news today, and
for sure.
maybe we could pick it up on what you have top of mind with this action. We're only like a layup away from new all-time highs in the S&Ps.
Yeah.
The consensus narrative is we take them out before we get any correction. Could the market be thrown for a loop and that not happen? That we could be peaking here and get a sell off? I'm still not seeing your screen. Maybe I have to. Oh, I have to stop sharing, Dave. I'm sorry.
Yeah, no
So,
worries.
oh, there you go.
You see
Okay.
it? Okay.
Yeah, we
Yeah.
we have the SPX here.
Yeah,
All
yeah, yeah.
right. Looks pretty good.
It looks very good, right? And I think
Yeah.
if you think about what the market's done from early April now to early
I've
June,
never seen this before.
any
And I'm
objection,
old. And I'm old.
you've seen
Okay.
things, right?
Yeah, I've
Yeah.
seen cycles.
No, and I would say that any objection, and I certainly, undoubtedly was fighting it back here, right? On that
Yeah.
initial rally off the lows, it certainly felt like a dead cat bounce, a counter trend move before the next big leg down. It absolutely had that configuration. But I would say from mid-April to mid-May, any resistance you had to the strength of the bull market has evaporated, right? And whether it's drawing trend lines off the highs, those have been broken. If you drew Fibonacci retracements off the major down leg, those were all violated. Moving averages did not hold, and it was broken out. And I think what was so interesting in the last month is the market in 2025 has gone through like 5 or 6 different kind of unique periods.
Mm.
And I think this period we're just coming out of is one of those, right? From sort of mid-May to early June, everything kind of stalled out, right? The S&P was accelerating, had that big gap higher
Yeah.
in early May when the European tariffs were adjustments were announced, and then we kind of stalled out, and the S&P, the Nasdaq, a lot of the Mag 7 names, I mean, most things sort of entered into this sideways consolidation phase, and so I think if there was a time when the market was going to roll over and just accelerate, it was at
That
that
is
moment.
past. That's
And
past.
it's passed. And now what's happened is it started with NVIDIA and On Semiconductor and other semiconductor names, other growthy names that started to emerge. And
I
now,
notice the SMH is stronger than NVIDIA. NVIDIA is not responding or showing the same relative strength as SMH. Is there a
no,
message
it's
in
true.
that?
And NVIDIA was sort of like an early jump.
Leader.
It jumped early, but then others, right? It's KLAC and On and Empower and all these other ones that have really started to accelerate now. So SMH as a whole is doing actually quite well, while
Yeah.
NVIDIA has kind of stalled out a bit. Yeah.
It's a star. And it,
Yeah.
it to me, isn't that the biggest percentage gain off the April lows?
I
The
think that's
semis?
probably right. And
Okay.
what's interesting is right about here, and this is where I find if you're trading like the E-minis, or if you have a very narrow range of focus and you're just looking at the S&P or like the Russell, you're missing kind of the broader thematic evolution. And so in the second half of May, things took on a very different tilt. The leadership started to change, right? The growth names stopped after rallying so significantly. Other things like industrials, insurance companies, these are the things all of a sudden starting to do it. Defensive sectors, things like utilities and staples start to outperform.
Financials.
But in the last 2 weeks, now all of that has changed again. And we've gone right back to the growth-led bull market phase that we've experienced in much of 2024, right? So
Yeah.
I feel like what I'm looking for now is not just the S&P not going up anymore. That's your first tell. But I think it's also things like leadership shifts, right? For now, it's still offense over defense. That would need to change. The breadth conditions are back to being quite strong, right? The
New
McClellan
all-time
oscillator
highs.
above zero, all-time highs on the AD lines.
Yeah.
That's bull market stuff. So anything I would do to measure, are we in a constructive or a destructive phase? It's pretty much all constructive at this point,
Yeah.
which tells you we're going up, but also gives you, I think, a clear set of things to watch to identify when that's no longer happening. And I'm not seeing any of those kind of
Would
classic
that be
reversal
fifth?
signals.
I think taking out 5920 would be negative in the S&Ps.
Yeah, so right, so when you have like a tactical uptrend, which we definitely do, it's
Yeah.
all about some of those swings, right? And seeing if we
Yeah.
can hold. It's that 59.20 level, that's that swing low
Yeah.
from last week.
Yeah.
100%, right? So,
Yeah.
and even if you drew trend lines off some of those recent lows, it's all kind of,
It
again,
looks like,
tracks this upward trajectory.
yeah, looks like a melt up, but it also looks like a wedge. And
Yeah.
we're not getting RSI confirmation. If you go back to the beginning of the chart, and
Yeah.
I know maybe I'm talking too much about me, but you see at the April low, that confirmed low that we had in the
Mm.
RSI down there.
Yeah.
All right, so a lot of my work is based upon momentum confirmations and divergences.
Yeah.
So, and it, like I say, it works. It's a probability, but it doesn't
Yeah.
always work.
Yeah.
So these kind of readings down there kept me from getting long and looking for retests, because this is rare that
Yeah.
you get this type of momentum, uh, the selling intensity at 20,
Yeah.
and it just rolls out of here without a retest or anything.
Yeah. Yeah.
So, and so if I would have just used that and didn't have stops, I'd still be short looking for a retest of
No,
the
it's
low.
true. And I would say
Yeah.
the severity of the sell, I mean, it really was a puking out into the April 7th low. I mean, it was aggressive. So breadth indicators got incredibly low. I think it was less than 10% of S&P stocks were above their 50-day moving average at the April low. I mean, it was huge negativity, but then so quickly it reverted higher. And while you'd want to see more divergences, you'd want to see more like signs of
Yeah,
reversal.
yeah.
There have been V bottoms like, I mean, it reminded me a lot of like the financial crisis, right? Sort of that 2008, 2009 low was a V
Okay.
bottom. I mean, a lot like this, where things accelerated down and then just popped up. And
Yeah.
at that point, it was the banks that just ripped it, like Bank of America just turned on a dime and then just shot to the upside.
Yeah, because Warren came in.
Exactly right. And so
I
it
remember that.
same idea. It's like what you have to remember is that I mean the markets in the modern age, for lack of a better term, are manipulated by a lot of outside forces. And so if there's enough liquidity injected or if there's enough of a policy change, we've now seen what the market can do and reverse suddenly.
Okay. Last week we were talking about the oil shares.
Yeah,
Since then, we had a breakout in WTI over 63, and we're getting some follow through. And it
yeah.
looks like the oil sector is also looking better than it was a week ago.
For sure, for sure. And I think the reason why I've been avoiding energy stocks pretty consistently is because of the lack of support of crude oil prices, right? Within the energy sector, there, it's as much as we think of it as a pretty homogeneous sector,
It
there are
isn't.
some different bets in there, right? You've got infrastructure plays, you've got natural
Right.
gas, you've got pipelines, and
Yeah.
these have actually done quite well, right? So some of those stocks have been remarkably strong in 2025, but it's the big oil producers, it's the integrated oil companies that have been really, really struggling. And those are the ones that are more highly correlated to crude oil prices, right? So until and unless crude oil prices push higher, it's hard to justify getting into, things like the XOP, which are really driven by price of crude oil. I would say at
Okay.
this point, from a technical perspective, it looks a lot like a double bottom pattern to me in April and May. Looks a lot like a higher low that we established in late May. And from then we gapped higher and started to move higher. And this particular gap is an important one. You call that a breakaway gap, which is when you
Okay.
have a pullback and then a new move that starts with a new gap, right? So it's sort of an impulse move in the new direction. And we've seen that further upside from there.
So the
So
next gap would be a runaway gap.
that's exactly right. Yeah. So where the gaps happen within the trend tell you a lot about what those should mean, right? Yeah.
Will you give me an honorary CMT
You're
designation?
pretty close. I mean, Dale, if it was my call, you'd have it. Okay.
I'm kidding you.
I don't have that power, but 100%.
All
You're
right,
talking the
so
talk well.
this is not updated today because we did have a reversal day yesterday, but that's been negated. Cruise up about it. Oh, there it is.
Yeah, I don't
Okay,
have the
yeah,
live crude oil price on here. Here's the USO, which is the crude
yeah,
oil ETF. You can see it popping higher again today. So
yeah.
yeah, this is as of
It opened above people who took the sell on the close. $40 cruise coming. That's still the narrative,
right.
right? Uh,
Right.
yes, they're choking a little bit.
Well, and
Could
and
go
yeah,
ahead.
and this is what I love about charts, right? Is Dale that the narrative will often be okay, crude going to 40. Crude can't go up because of
Yeah,
XYZ. Charts really don't care what you think, right? They
they
and
don't.
they do. And I feel like what I often tell people is the reasons why things like this happen are always crystal clear in the rearview mirror, right? Down the
Yes,
road, we'll look back and say, okay, that's why crude oil prices accelerated. The macro environment is not always it's not always leading. It's not always easy to anticipate what some of these things are going to do, but the charts don't lie, right? If the
yeah,
price is accelerating, the price is accelerating. The reasons will make sense later. Focus on the trends and what they're doing. Crude oil is bouncing higher.
yeah. If you master pattern recognition, whatever it
Yeah,
is, um, you become the Wayne Gretzky of trading because you and I live in the future.
you have
We
to,
may
right?
be here right now,
Yeah,
right, talking to each other,
yeah,
but I know you're out there about a week
yeah.
or two, at least a week or two out there
You
thinking
have to,
about it.
right?
Yeah,
And to be honest, and I think you hinted at this, Dale, maybe what I always tell people is remember it's not absolutes. I find a lot of times people think in absolutes. Crude oil is going up, right? And
yeah,
that's not how I think. It's all probabilities. I think the likely scenario is this, but I'm also thinking about some alternative scenarios too. And that's why I think when you look at the chart of crude oil or gold or the Nasdaq or whatever it is, you think about what the weight of the evidence is telling you, but you also think about what's that line in the sand, what's that level, what's that signal that would tell you something's different. And I think getting to that point is crucial. So at this point, I'm bullish on crude oil, but I've pretty much laid out. But when this happens, that's not the right trade anymore, and I need to make sure I take action. And I would encourage people to get to that point in their thinking when they're analyzing a chart like this.
Okay, maybe we could look at what I think is acting differently than the rest of the market on both the recovery basis, and it looks like its correction may be completing, would
Mhm.
be Google.
Yeah,
And the narrative's very bullish. It's worth so much more if you just broke up the parts
yeah,
of Google. I'm hearing that, and compared to what you were showing in the S&P, I call this kind of a weak recovery.
yeah, yeah.
I mean, I didn't do the fibs on them, but it may be 61.8. What do you see there?
Yeah, so within the Magnificent Seven kind of group of stocks, they at times have all moved very, very similar ways. This is one of those times where they're actually diverging quite a bit. And
Okay.
you have some that have been really positive outliers, like probably Meta and Netflix, if you group that in there, the strongest charts.
Yeah.
And then you have some sort of underwhelming charts, like Tesla at times has been pretty,
Yeah.
a very, different pattern. But right now, you have a couple that have been sort of question marks that appear to be resolving in a positive way, and it's Amazon and Alphabet. And what's unique
Okay.
about these is charts like Meta, if you sort of start there, these are stocks that broke above their 200-day back here, right, early
Yeah.
May, and
Yeah.
have just continued to the upside, right? And when you have a market that sells off so aggressively and then starts to rally, focusing on which names recover above their 200-day and which ones are unable to do so is a good sort of basic litmus test as to what are the leaders and what are the laggards, right? The
Yeah,
leading names.
you don't, do you ever buy the laggards for catch-up plays? I mean, to me, it's makes me feel like a sucker. Uh,
I
I don't
mean,
know about, oh yeah,
yeah.
it didn't go with that big tailwind, but now it's going to play catch up. It's, get hormone shots. I'm not sure what, buddy, but do you do that? You trade catch up
Not
plays?
my preferred way of trading. And I will I mean and that can work sometimes for sure, but I always think of the baseball analogy, right? If you're managing the Mariners or the Yankees or whatever your team is, who are you going to put on the field? You're going to put your top players that are swinging well, fielding well, throwing well, or are you going to put the guys that are slumping and thinking maybe today's the day they're going to help me beat, the Red Sox? I mean, you
Yeah,
put your top players on the field, right? You put the players out there that are going to give you the best opportunity to win. And so with
yeah,
that mentality, the struggling names are usually not the place I want to be. I'd rather,
yeah.
lean into strength and make sure that the leaders I have exposure there. And that's something honestly that was beaten into my head in my Fidelity years because we would need to, I mean, you would have to own the leading names in the leading sectors. That was your main goal was
That's a great
focusing
lesson.
on the leaders and the growers
Yeah,
and the
yeah.
laggards aren't there. I mean, it's the ones that are demonstrating that they are telling you they deserve a place in your
It's
portfolio.
the ones that are walking the talk, right,
Yeah,
Dave?
that's exactly right. That's exactly right. So
Dave, go ahead.
no, I was going to say so Meta led, I mean, and was up there, but Alphabet, Amazon, these are names that struggle to get above their 200-day. And I would say for Alphabet, sort of mid-May to early June really was questionable. This is a big shooting star candle, which
Yeah,
is we closed above the 200-day for the first time in a couple months, but had this big shooting star candle, right, which is a big upper shadow and we closed near the lows of the day. And that was a great sort of short-term reversal sign telling you that's it for the upswing. We're pulling back. But what's happened in the last week is we've now regained the 200-day moving average. So when I see something like that, my general approach is you buy a breakout, you use the 200-day as sort of your initial stop just to lock in those gains. And what you're basically saying is
okay.
as
So
long
if
as
you're
this holds the 200-day, we're in good shape.
okay, so you're long against 171.
Yeah. Yeah.
Yeah, it's a
And
nice,
you're
it's not a
basically
high
playing a
risk trade.
return back to that gap from early
Yeah,
February, which was a breakaway gap there.
beautiful. I'm glad I didn't buy the puts yet. So, Dave, it was a pleasure batting the ball around with you on the field today. And, I always have a great time. And I think people learn when they hear you talk.
Yeah, yeah,
Best way for people to follow you. How about this? Best way for people to get involved and learn from you uh, what you're teaching people to be
yeah.
able to navigate these markets and be tactical.
Yeah, no, I appreciate it, Dale. I mean, it's always so much fun to chat with you. I'm happy to do it anytime. My website's marketmisbehavior.com. Couple things that I do. I run a YouTube channel where I do a market recap. If you want to tune in live, you can do it at 5 p.m. Eastern, but it's all recorded and posted on there, so a lot of people watch it later in the evening. And I do a podcast where I interview people like Dale Pinkert, who have some interesting stories and perspective
Oh,
to share. So happy to do that as well, and you can find all that there. And then I have a premium membership if you need help really applying some of these lessons and getting some better support doing so. You
you
can
get
check that out as
one
well.
out ever go one-on-one mentoring with people?
I don't. I used to, and
So
I've
it's
gotten
pretty
away from
time
it.
consuming. Yeah,
It's a tough one time wise, and so
yeah.
I've found things that I can scale a little bit better than that. But
All
yeah,
right. And next time, bring your trumpet. My guitar's back here. Yeah,
I love it. We'll do it.
I was gonna be a rock star.
Yeah,
And you know what? I still am in my mind.
there you
I
go.
in my delusional mind. You know what? And you're a hot trumpet player. That's
That's
just,
right.
just likes to trade. So
I love it.
trade
I love it.
trading is what we do, not who we are.
There it is. Quote, that's a quotable Dale Pinker right there.
All
I'll
right.
take
Well, you could use it.
it.
Dave Keller, everyone. You want to be a good chartist? You go find Dave. You listen to Dave, and you'll grow. So don't just count your pips, count your blessings. Thanks again very much, Dave Keller. Thank you, buddy.
Thanks, Dale. Take care, my friend.
See you later. That's a wrap, everyone. See you tomorrow. Good hunting the rest of the day. Adios.